Okay, my God team, welcome back to the channel. Thanks for tuning into today's video. Guys, Bitcoin has done some crazy moves in the last 24 hours. And of course, we've had that significant drop down on the Bitcoin chart all the way from the top of this wedge, about 22,800. We crashed all the way down. We talked about this in our previous video over here. You can see we expected a pullback. We did expect a pullback. We've expected a pullback for a while now. We've always expected us to come back down and retest the macro uptrending 9-year support. We would like a retest, and we're talking about this in the last few weeks, that our ideal scenario would have been a push upwards, of retest of the support, and a continuation later in October. We talked about it a few times already. Never have we ever expected a V-shaped reversal. We expected a bit of sideways action like we've seen in the last few cycles. What's caught everyone off guard isn't the fact that we've gone down. It's the fact that we've done it so quickly. We've almost wiped off 2 months of uptrend within a 2-day period. Absolutely wild, guys. Insane price action. We're going to break it down today. We're going to talk all about it. Let's go ahead and get into it. Before we get into it, guys, remember, head over to the pinned comment down below. Click the link. Should be the first link down below. Join the Telegram channel, get access to all our updates, analysis, and a whole range of more stuff in there. It's an absolute must to be in. It's our primary place to update you guys. So head over to Telegram. Let's go ahead and talk about the price action. Now, we have a lot going on in this chart. We're going to talk about a few charts today. This is our Bitcoin chart over here. As you can see, this is zoomed out. On our macro, we can go ahead and put our lines and stuff in. First and foremost, guys, we are in a macro descending channel. Let's go ahead and hide some of this stuff just for now, make it a little bit easier to look at, and we'll break it down a little bit more as we go. So what we're currently seeing is this macro downtrend. This is our bear market. This macro downtrend here, this ascending channel, is essentially our bear market. And we've been in this downtrend for quite some time now. We've been in it, you know, from top to date, about 284 days, which is quite some time. It isn't the longest downtrend we've seen on Bitcoin, but it is a downtrend nevertheless. And we are coming close to what you would call, you know, the downward sloping resistance of this downtrend previous to this current rejection. So what we've seen here on the short term, guys, we saw a significant rejection right through this major support zone. Now, if you remember this support zone over here, just 22,000 to 23,800, that was our weekly support zone and resistance zone that we tested in December 2020. Breaking through that was sent us up into this parabolic move into the next range, and that's something we expected to occur, but just didn't have that steam. We still got rejected. Multitude of reasons why. Obviously, the primary reason is, number one, we were still in that macro downtrend, this descending channel, so we still do have that selling pressure. Last time we didn't really have that much selling pressure. We were kind of cutting into new highs at that point. We didn't really have any resistances set at that point above us. And obviously, two, we're in that short-term bearish structure, which was that rising wedge. And number three, we did have that major resistance that we do have to break to come down and retest and push upwards. So let's talk about what's going on over here. And one thing I do want to point out is the exact point of which we've come down to retest is a very interesting level. And the level I find it really interesting is because we're doing a support resistance flip on a very important diagonal line that no one's really talking about. And this is this diagonal downward sloping trend. It's a little bit of a range that we've noticed act as significant support and resistance levels on the Bitcoin chart, basically over the last, 500 or so days, if not more. And we're seeing, as soon as we break from the top side through this level, we end up seeing an extended sell-off here and here again, 2 times. Every time we break through this level from the downside up, we end up seeing a significant rally. All right, we always see a significant rally, and sometimes we find some support on that level. What we're currently doing is we've come down and we've retested this level, and that is in combination with the upward trending support of this trend line. Now, this is where it gets confusing because there are still a variety of different, I would say, directions the price can go. And this is where everyone's getting confused, and I don't blame them. It's pretty confusing stuff, and it's not very obvious either. It's quite confusing. First and foremost, we have a couple bearish structures and bullish structures forming at the same time. For example, our macro structure is a descending channel. We all agree on that. It's a descending channel. It is a bullish reversal pattern, meaning at some point when it does break, provided we have the momentum, we don't fake out, we do expect this trend to flip eventually. Everyone can agree on that. The question is, when will that occur? Step number 2 is we do have this short-term ascending channel, which is a bearish structure forming on the short term, of course. And with that, we do have a measured move target. If you go ahead and take the width of the channel, this will take us from the breakout point down to about $15,000. And if you take the flagpole, this takes us even lower. So our measured move takes us even lower. That takes us to 6,000. Now, here is the thing about measured moves. They're not going to tell you where the price will end up. They just tell you a range of which it could go. Now, just because the measured move is telling us it's going to go down, it doesn't mean we're going to go down to $15,000 or $6,000. What it's telling us is if we do break down through here, we can expect the price to continue until it reaches the next major support, in which a new pattern will form, whether it be a short term, extended term, it doesn't matter. And then we go ahead and reassess again. So looking at the price action right now, if we do lose this uptrending support line, we'll go down to a smaller time frame, we can expect the price to fall into this range. Now, we do have a lot of support where we are currently. I don't know why it's taking a while. My Wi-Fi has been a little bit slow today, which is quite interesting. Here we go. So there we go. We have a lot of support. We have this diagonal support, and we have our bottom support, which was at, $17,500, $19,000 range. So for us to lose this whole level here would take a significant amount of selling pressure for that to occur. And a lot of people are asking, Whale, is the bottom still in? And my simple answer to that is, have we created a new low? There's the answer. Is the bottom still in? Have we created a new low? No, we haven't. The bottom is technically still in until proven otherwise. When will the bottom not be in anymore? When the price falls below the bottom. That is when the bottom is no longer in, okay? Now, all I can do, guys, as a technical analyst, all right, is go off historical price action. I can use economic data and make predictions, okay, and give you a whole range of different stuff. I can jump on the bandwagon and tell you, we're going down, we're going to crash, whatever, okay? But until we lose that 9-year trend line, it is higher odds that we don't. The risk reward is favorable. And this is what I've been trying to tell everyone. Regardless of whether we lose the trend line or not, the return on your investment buying at that trend line statistically is much more favorable in terms of return on the investment, so risk versus reward, as well as the most likely point in accordance to historical price action to where Bitcoin will bottom, okay? And I've talked about this a lot on the channel, and I don't feel like I want to repeat myself too much, but this was the ideal time to buy Bitcoin. If you bought when we told you at $18,000, I don't know why I shorted, you would have made a significant amount of profit, okay? Even if we come down and we lose a trend line, which is currently sitting around 19,000 something odd dollars, you've still made about 10% on that investment if you're still currently holding, and if you didn't take profit or you didn't sell up at around 40% upwards, okay? So it is literally impossible for us to lose now because we've set ourselves up in a great position. If we crash below that trend line, whatever, we end up going to short. And if we lose this bottom level here, well, it doesn't matter. We've already taken our profit on our spot holdings, and we can look to short significantly on the way down. And we've talked a lot about those lower targets. A lot of people are going to say, oh, well, you're flip-flopping now, bring up lower targets. But these are targets I've had forever. I've had these for a very long time. Even back over here, we already said, guys, if this 9-year trend line does not hold, we will be going to about $12,000 to $13,000. That is not new news. I was very, very early to tell everyone that. I told everyone that way back in March, April, before anyone else was talking about that. This was something that we've had planned the entire time in case that 9-year trend line breaks. But like I said, I've stuck to my word, and I believe the 9-year trend line will not break, and hence why I've gone ahead and taken positions to that level. If it does, we'll react. We have a plan. If it doesn't, great, awesome. It continues upwards. We've got it anyway. We're making that money anyway. It doesn't matter what happened, guys. We're on top of it no matter what occurs. Let's go ahead and break down that short term. So right now on the short term, guys, obviously Bitcoin has had a significant drop, and I've got a few little annotations I was doing before over here, just scribbling around on the chart. And I want to point out something on that short-term time frame, which is quite interesting. What we're seeing here, we've got some really odd 15-minute candles here. Looks like we're going to see a move upwards, or even get a rejection, which is pretty interesting candles over here. We have what we call a descending expanding wedge, or what other people will call a falling broadening wedge or descending broadening wedge, whatever you want to call it. Now, this is when we have a descending price action, or two descending trend lines, which are expanding. So they're growing wider and wider as time goes along. So obviously thinner at this point here, and the distance between the trend lines expands. So that's the word expanding wedge. Now we can go for a measured move target. A measured move target for an expanding wedge takes us to the point of entry. So if we go ahead and do a measured move target, then measured move will take us to about over here on the price. That's sitting around 21,900 for a measured move. That is a target from the current price range of about a 2.7% move upwards. Now, what am I saying with all this? What I'm saying with all this is we've come down, we've retested 21,000, which is that major support zone, which is that upward trending support line, that downward trending dotted support line. We're bouncing from that level. We have a potential bullish reversal pattern forming. This could end up extending into reversal on the short term at least. But like I said, guys, it is quite unlikely. If we do lose this trend line, we're going to be heading lower. And to reclaim these high levels now, there's a lot of resistance above us. It's going to be quite difficult to push up and reclaim these levels now. I think the best thing to do right now is wait for your weekly close. And the weekly close is coming in a couple days, about a day and 17 hours. Be really interesting to see if this weekly candle can actually remain above this uptrending support and not dip too much into this downtrending dotted trend line. I think that's what I'm personally waiting for. I think that's what many people should be waiting for. Again, I wouldn't be looking for massive entries here. I think the best thing to do is wait for the weekly close, assess the damage, see what has happened. Because we've had a very bearish candle. You know, this is a this is a crazy candle, guys, and the price action has been insane in the last few days. And we're just hoping for a little bit more stability in price now, a little bit less manipulation, less volatility. And, you know, I've heard word on the street that this sell-off was caused by the Mt. Gox token release. I think to pay their victims. I had a lot of tokens, a lot of Bitcoin, a lot of coins dropped on the market. And obviously, if you're buying a 400 and it's locked up for many years, since 2014, and now our price is at 21,000, you're probably going to be selling that. So I think a lot of that got dumped on the market. It shot the price down really quickly. It'll come down. We've retested support. Lost about 2 months of the uptrend, but it's okay. We've still got a lot of support beneath us now. And again, it comes to that position where the risk reward is favorable. Even if you buy now for a short-term position, okay, your risk is no more than a couple percent. Your return can push you back up, you know, 22,800. Say, for example, it goes crazy bullish again, which is, I don't know how I feel about that. I think I would like to see a retest of that 9-year trend line, like I said before, but your return on investment, even for a move upwards, you know, to about 22,200 or retesting these lows over here, is still favorable. Coming back to that macro chart, a retest of this trend line would be ideal. And we've talked about that a lot. I would personally still like to see that retest and a push upwards, maybe get some sort of double bottom forming over here, or even a higher low, and then we form this ascending triangle and we push upwards. Something like that would be ideal. And we've got a lot of threat, obviously, for a lower drop. Of course, if the economy continues to worsen, and we talked about that in a little bit in our last video. We talked about how that the Fed's talked about in a minutes meeting that they do anticipate a 0.5% hike in September. Obviously, that is still increasing actual risk because we're having additional hikes on top of the current rate, but it is slowing down in comparison to what we had before, which was 0.75. So obviously a 0.5 would be seen as a more favorable thing for the market. We might see some relief there. Okay, that's all I want to talk about today, guys. I think play it by layer by layer. All right, play it level by level. Zoom out. There's no need to be overly bullish or bearish. There's no need to think about the macro too much. The only reason why we're telling you guys was everyone wants to hear it. For some reason, everyone's fascinated about the macro. But the best thing to do, guys, is just play it level by level. And we've told you this entire time, you know, we were incredibly bearish. Yeah, we're going to admit, we were incredibly bearish this entire way down. All right. When we hit the bottom here, we didn't flip bullish. I want people to remember, I'm not bullish. I've never been bullish. I've never been even remotely close. All I expected was I expected a significant bounce from this level, which was seen, and 2, I expected this to be the probable bottom based on historical price action. Okay, if it's wrong, it's wrong. If it's right, it's right. I don't care. It doesn't matter. We trade by level. We've made significant profits on the way up here. Huge profits. We did not miss that move, and we made massive profits on the way down. So in my eyes, a win's a win. That being said, guys, if you're interested in trading where I trade, head over to Bitget. You can find the link for Bitget down below. I'm going to play a little video. You'll get a little bit information about Bitget, but Bitget is essentially the exchange I use on a daily basis. Probably the best exchange out there for trading futures. Accessible globally, lowest speeds possible. Really the place we want to be. Okay. Thanks for tuning in, guys. I'll catch you tomorrow for another update. Cheers. Okay guys, we're going to be taking a quick look at Bitget, and now Bitget is where I personally trade. I highly recommend signing up to Bitget with the link down below. Bitget is probably the best exchange out there if you are a trader. It has a variety of features, and the best things about Bitget are a few things. Number one, it's non-KYC. Well, KYC is completely optional on Bitget. Now, there's a whole variety of exchanges out there nowadays that have gone completely centralized, sharing your personal trading information and information of decentralized governments and different governing bodies. Bitget allows that option to be left to the individual, to the user of the exchange. You can decide to non-KYC, you can decide to KYC. It's completely your choice. Another really beneficial thing about Bitget, and the biggest reasons why I'm sitting here actually recommending Bitget to all my followers, is that it has 0.02% trading fees. All right, this is significantly lower than any other cryptocurrency trading exchange out there. FTX, Binance, can name a bunch more, KuCoin. It is significantly lower, by 500% lower than the lowest exchange out there, Binance. Another big thing, guys, is there's no global restrictions on who can use Bitget. Anyone from anywhere can sign up to Bitget and get access to the entire exchange of all the tools, whether it be futures or spot. No matter which country you're in, you can use futures and spot. If you're in America, for say, and you want to get access to more spot trading pairs, such as Binance Global, and you can't sign up, well, guess what? They've got 250 different spot trading pairs here on Bitget to get access to, and you can get access to all of these. If you're in Australia and you want to access the futures market and you can't trade futures, you can do it here on Bitget. You can get access to the future market and start trading with leverage. And finally, guys, if you do want to sign up to Bitget, go ahead, click that link down below to sign up to Bitget, and you'll get access to the reward center over here, which enables up to $4,000 in rewards by completing 5 tasks. All right, guys, we'll get back to the video. Thanks for listening to that. Okay, guys, I want to take a quick moment to introduce the Become a Trader course at the end of this video. This course was designed by myself and Wolves of Crypto. We put together a whole variety of knowledge to create the most cohesive, understandable, and beneficial trading course there is on the market. If you're interested in learning how to become a trader, if you're interested in learning how to use technical analysis, if you're interested in learning how to apply market analysis to different cryptocurrencies, this is a course for you. We teach you everything from the fundamentals, the basics about what cryptocurrency is, how to trade cryptocurrency, mastering the craft of cryptocurrency, diving into a whole range of technical indicators, market structures, and teaching you how to utilize these when finding trades and applying risk management strategies to become more profitable over time. We even dive into market psychology, human psychology, and provide a variety of different videos and educational content, including courses and quizzes to assist your learning along the way. If this is something you're interested in, guys, go ahead and contact us down below at the cryptoacademycourses@gmail.com. We'll send you an email back with all the course information, the structure, the payment details, and everything else you need to know. That being said, guys, I hope you enjoyed the video today, and we'll catch you in the next one.